Well, good afternoon, everybody. Here we are. It's Monday, 30th of July, 2018, and today we're here for the first of our sessions, which are all about mastering the 4 M's of trading. My name's Paul Wallace. I'm going to be the presenter for today and for the rest of our sessions. I'm a trader, an analyst, and a coach, and I'll be more about my background a few slides in. I hope that you can all hear my voice. I hope that you can see my screens. And before I start to dig into the sort of the main part of our presentation for today, as always, I'm just going to start with a quick risk disclaimer. Forex and CFD instruments are leveraged products that carry high level of risks and are not suitable for all investors. Please ensure you fully understand all risks involved and seek advice from an independent financial advisor if needed. Investors should study carefully the key information documents in order to understand the nature, risk, costs, potential gains, and losses of margin products offered by ourselves. So, ladies and gentlemen, here we are. It's I said it's an Admiral session. Why are we interested with Admiral markets? Well, Admiral have a fantastic range of products, instruments, and services that they can offer clients. And as part of these sessions within the 4 M's, we're going to be touching upon a wide range of them as we bring them into our sessions. In particular, Admiral markets are exceptionally good at offering the DAX 30, and the spread is exceptionally competitive. And they also offer both MT4 and MT5 with their Supreme edition for both, which is a fantastic add-on tool to the MetaTrader suite of products. So, ladies and gentlemen, who am I? Okay, as I said, my name's Paul Wallace. All right, I'll just cover this for the first of our sessions. My background is that I actually came through the military, through to working in the city in the late 90s, and I started trading during the dot-com boom of the late 90s. I was trading equities there, and I was just very fortunate to be in the right place at the right time. But that got me started with the trading bug. Then invariably, what happened is over a few years in the noughties, I transitioned it out of my corporate employment towards trading primarily FX markets, and then I transitioned into working for funds as a trader, and then I also started to sort of help and support traders, both as sort of, let's say, private traders starting away, but also with institutional traders sort of operating at tier 1 funds running $200 million books. So I've not only have I traded across the broad spread of instruments, but I've also helped and supported traders, as I said, from complete beginners to sort of experienced international traders. Split my time now between both the UK and Ireland, which allows me to spend some time on the farm in the summer, and then also be in the city in London during the working week to work with clients and engage with the markets. So there you go. It's a bit of I've had a broad spectrum in terms of where I've come from, but I suppose the message I'd like to get across is that I don't consider myself a superstar or particularly gifted. What has come from is really from a bit of determination and persistence and tenacity, and a little bit of humility by always just being ready to learn and always looking to try and improve on my trading on a trade by trade, day by day, month by month, year by year basis. And that's one of the kind of themes that I want to underpin these sessions that we will be talking about for Admiral markets, mastering the 4 M's of trading. So just to give you a little bit of insight into my actual own trading, okay, what does that mean? Well, as I say there's an old showbiz saying there: if it takes 10 years to be an overnight success. And what do I mean by that? As well, I trade for myself. I trade for clients. Okay, I do presentations about trading for institutions and for traders. And so, of course, people think that that it's it becomes a sort of a natural element. But I think, as I said in the last slide before, it's actually as it says there, it takes 10 years to be an overnight success. And what it is it's about that working towards a sort of a goal there, towards being a sort of a world-class trader, and actually just demonstrating the sort of determination and tenacity and perseverance to learn from your mistakes and just get better and better time after time after time. And that's brought me to the space where I am in terms of my own trading. I describe myself as a discretionary-based method trader. I appreciate that some of the people joining us today might be completely new traders and may not really understand that, but I guarantee by joining us on these sessions, within a few of them, you'll understand that what that means as I explain and show you what that entails. Primarily, the majority of my traders are, swing trades. I'm a grand fan of the weekly charts, daily, 4-hourly charts make up the bread and butter of how I would operate. I will also do a little bit of intraday trading, and I'll touch on that in the next slide or two. I'm particularly key on simplicity. All right, simplicity is key. I know myself that I'm a fear-based trader, and when you're operating as either a fear-based trader or a greed-based trader, it's about knowing who you are. And as a fear-based trader, I know that actually what I need is just simplicity and precision in terms of how I engage with the market. In terms of how I make my own trading decision, well, I meld fundamentals, technical sentiment, and geopolitics into my decision matrix. Primarily, I look to operate in FX indices and commodities markets. I find myself, whilst I will look at a few equities, I tend to prefer to trade FX indices and commodities and then invest in equities. I've just found over time that tends to suit my personality. With regards to my major trading philosophy for swing trading, as I said, it's simplicity. I'm looking to buy strength and sell weakness, and especially within FX markets, I'm just looking to find, where are the strongest currencies and then trade them against the weakest currencies. That's the simplicity of my overall trading philosophy. Ideally, I like to use pullbacks for entries. What does that mean? Well, you're really either looking to trade a breakout, or you're looking to trade a pullback. Primarily, I will prefer to trade a pullback. That's what I've learned myself over many years. Some people are breakout traders, and as you'll find as we go through this entire series, is about understanding about what type of trader you are, right? I know that I prefer to trade on pullbacks. What I do is, I look to use a bit of picture building, which is about understanding strength, trend, and momentum from the weekly charts, and then I'm looking to execute and manage on daily and 4-hour charts. And once I've identified where I want to be in terms of position in a specific instrument or market, then I'm just looking to use simple price action techniques on pullbacks for entries. Nothing terribly esoteric. As I said, simplicity is key. I know that as a fear-based trader, I just need to have a couple of simple setups that I can see and know when they show up. That's my trade, and I'm not having to allow any kind of ambiguity or hesitation. And as we go through these sessions, hopefully that will come across to yourselves, that be able to understand and see how that sets up and develops within not only myself, but as you as a trader yourselves. So as I said there, for my swing trading, I'm primarily a trend trader. Really, I'm just looking to, as I said, buy strength, sell weakness. I'm looking to find a dominant trend and try and get on it and stay with it. That's what I'm looking to do. And for my intraday trading, I'm actually the opposite. I'm primarily a mean reversion trader. What I'm looking for is markets to sort of bulge or overextend themselves, and as they get overextend and become tired, then I'm looking to take an opportunity to trade the reversal, the reversion back to the mean. So they're very different, in terms of the way operate, and I know for myself that I want to trade trends on a longer term basis where possible, and on an intraday basis I'm much better at trading mean reversion. And it comes back to that that theme of know what type of trader you are, know where your particular edge is, and then be able to operate within that, and that's where you'll tend to achieve some level of success. So mastering the 4 M's of trading. All right. So what I should say is that if you have questions as we go, please ping them in the chat box. I'll try and pick up on them, and I'll try and answer them as we go. I appreciate that we've got a bit of a broad spectrum of people here in the room and joining us. So I'm trying to cover that and try and capture and help people across the whole breadth of trading experience. But what I've found over years of trading myself and over years of working in funds and of years of helping and supporting all traders from all walks of life and all backgrounds is that invariably when I start to talk to traders, okay, when I start to sort of have a conversation about their own trading, then really I'm looking at everybody through this prism, okay, of the 4 M's of trading. What are those 4 M's? Well, as you can see there, markets, method, money, and myself. That's what I'm looking at. Okay. Very often when you're a new trader, you don't know what you don't know. And so you are trying to understand that invariably that you just think it's about it's having a simple trading method, and that's actually all required. However, as you develop and as you evolve as a trader, you learn to realize that there's more to it than that. There's more to it than meets the eye. And what you start to realize and understand is about, you need to understand the markets that you're operating in. Can you actually identify and work with them? Are they suitable for you? There is actually about understanding all the various types of methods that are out there for you to operate. Actually ensuring that you are managing risk, okay, in terms of the sort of the money you're utilizing, and then actually how you manage yourself, manage yourself, and that in itself is quite a broad spectrum. And for this first session today, what I'm doing is I'm going to sort of dig into those a little bit, and then, as I said, over the forthcoming sessions, these whole sessions we'll utilize all elements of that. Maybe 1 or 2 sessions we might focus on 1 or 2 of those particular silos, as I sort of provide a little bit of education, a little bit of insight, a little bit of coaching, a little bit of teaching, and hopefully that will help you over the period of these sessions start to grow and build and develop your own skills and confidence as a trader. So the reason that I try to focus on this so much when I'm working with traders and in my own trading is that what I've learned is that there's a particular sweet spot, all right, the particular sweet spot with traders, namely that when all 4 of those areas of your trading are in alignment or are in a good place, well, then that invariably is the kind of the sweet spot whereby our trading tends to go very, very well. Also, if you look back at your own, let's say your own trading history, your own trading records and journals, I'll kind of guarantee that periods where you were trading well, there's an exceptionally good chance that all 4 areas of those were in alignment. Or if you had periods where you were struggling, having a little bit of a challenge, that actually I'll guarantee that several of those areas were probably out of alignment. And I'll explain a little bit more of that as we go through. But it becomes increasingly important as a trader to sort of be able to understand and recognize, where you are in those 4 M's, okay, where you are in terms of, your ability to manage them, your ability to actually master them, and also, how you're actively, growing and evolving within those particular areas. And these sessions will hopefully help you with developing that. So we're going to talk a little bit about the sort of the first session, okay, the first element, which is markets, okay. Well, markets, we'll dig into this a little bit. What I'm going to do is I just want to think of this session as almost like setting the scene, okay. That's what we're looking to do, to set the scene, to invariably sort of help you build that picture, that broader, brighter picture of what we're actually particularly looking at throughout the entire sessions. So what am I thinking of when I talk to someone about mastering the sort of the markets of trading? Well, part of it is about understanding the actual the markets that you have available to us. All right, so we have equities, okay, the sort of actual particular stocks on particular exchanges around the world. We have the indices, okay, within them that those equities will make up particular indices that we are able to engage with, okay. And it's about understanding, regardless of what you trade, it's about being able to understand what those indices are and how they operate and what impact they are having on the global markets, as you realize with the increasing technology and automation that we actually also have. We're sort of almost kind of moving towards like one global index that will invariably give us insight into what is the sort of the sense of the market at that moment. We also have the opportunity to recognize, you know, the different types of commodities markets, okay, the hard and the soft commodities markets, all right. You know, the soft being normally the, you know, the agricultural products, okay, you know, corn, wheat, okay, pork belly, orange juice, etc. The hards being, you know, invariably the commodities which, you know, we dig out of the ground, you know, that's the gold, you know, the silver, the platinum, etc., oil, all right. So, you know, it's about recognizing and understanding them. FX markets are pretty much well known, you know, especially with the sort of let's call it the private trading community, about being able to trade the biggest market in the world, foreign exchange, and then also there are the opportunities for people to trade bonds, fixed income markets. Okay, in particular, you know, within the UK or within the European market, you know, people will quite happily trade the bonds. Bonds is a very popular market. There's sort of German fixed income markets. We also have access to a lot of the American bond markets as well. So, you know, what I need to know from you, what I need to sort of understand from you as a trader is that, you know, you understand the market that you're operating in. Those markets are all quite different. They all have different personalities. They all have a different way of moving. They all have various degrees of volatility and liquidity. And it's about, you know, I need to know as a trader that, you know, you're operating in the one that suits you the best, okay, that you actually understand that market, you know, to the best of your ability. Now, invariably, there's a lot of traders who are driven towards particular markets, but it's about recognizing and understanding, you know, which is the one that actually suits you the best. Because, you know, as we've just sort of talked about in the last slide or two, it's really about understanding, you know, those kind of starting to get all those pieces in place, so that those 4 M's, you know, you're in a good spot within all of those 4 M's, so you're in a particular ability to sort of to manage and master them as you develop and grow as a trader. Also, you know, with in terms of markets, you know, at its very most simplistic basis, and that's what we're going to finish the session on today. Is, you know, I need to know that, you know, as a trader, you're able to identify whether that particular market is either trending or in a range bound or consolidation range. Okay, this becomes, you know, quite this becomes very important, in fact, you know. And even today I am sometimes surprised, okay, by traders who may be not able to identify what sort of environment that market is in. So whatever you're trading, whether you're trading, you know, I don't know, intraday euro dollar, or whether you're trading, you know, monthly oil, or you're trading, you know, sort of a daily charts on Facebook. Okay, what I need to see from a trader, and what I need to understand, is that trader can understand and demonstrate and show that they understand that market is either in a trending or a range bound environment. Because realistically, okay, if you're unable to do that, well, then the rest of the stuff starts to fall down pretty quickly. Okay, and as we lead on to the next section, sorry, then that actually just it flows into that very very clearly. So, you know, that was, as I said, we're just setting the scene here. We're just setting the scene in our session today. All right, you know, we just talked about markets, but then that leads us on to method. All right, so trying to understand the markets that we're operating in, but then we need to look at, you know, the methods that we're going to use to sort of engage with the market itself. Not you know, not unsurprisingly, this is the most popular focus. Okay, and you know, for years in London, I've run a thing called the London Traders Network, and where, you know, every couple of months there's about 50 to 100 traders all turn up, and they all want to, you know, chat with other traders about, you know, about their experience in the markets. But I can assure you, you know, one of the most popular focuses, everybody wants to know what the other person's trading method or system or strategy or tactics are. Everybody's always curious. Everybody's always interested. Okay, everybody's always, you know, interested to know how the other person, you know, sort of what their trading strategy is. And of course, you know, if you go on to, you know, sort of internet search engine and, you know, sort of search for trading strategy, well, you know, you'll find there are thousands out there, thousands and thousands out there. Okay, and, you know, what I like to see and understand from a trader is that they understand what their method is. Okay, you know, for me, a method is a you know, it's a sort of a spread of ideas and concepts that I pull together in terms of particular tactics, which is what I might use for specific market environments or for specific particular setups. In line with my strategy. Well, actually, I'm within the FX markets. My overall strategy is actually to buy strength and sell weakness. That's what I'm looking to do. Okay, and sometimes people overcomplicate strategy. Sometimes people think buying a rejection candle or buying a pin bar is what the strategy is. That actually isn't a strategy. That's a tactic. Okay, that's a tactic. Your overall strategy should be about understanding, okay, what actually has to happen for you to engage within that market. So of course, within that, it offers a massive scope for what you want to do in terms of, how you want to make a trading decision. So, there are some people who will love to sort of make the decisions based on fundamental analysis. So they are looking to try and understand the underlying, economics of a particular instrument or a particular, country, and from that, they will make their trading decisions accordingly. With many of the private trader community, they will very often use technical analysis as the basis of their decision-making criteria. Invariably, technical analysis is simply charts, right? It's simply looking at charts there, okay, and being able to make a decision off that. Some people will use a type of sentiment analysis, and and that can depend upon a lot about how you actually define it. All right, a lot of people might define the particular confidence in an instrument based upon might be based upon sort of the news of it, might be based upon other traders' positionings. There's a few ways that can sort of play out, but realistically what you're looking at is sentiment analysis is all about understanding the confidence that traders have in that, whether it be a stock, whether it be a resource, whether it be a particular FX pair. It's about understanding what confidence we have in that. Once again, okay, it comes back to the method or the method you're utilizing. Is it really operating in either a trend following or a range bound environment? Okay, and this is very often one of the very simplest and easiest kind of corrections that I can quite often make to traders when I work with them, is that they may have a trend following, let's call it a trend following system that they want to employ, but they haven't realized that particular market they're trading is range bound. Okay, so it doesn't really matter how fantastic that trend following system is. If the market environment is range bound, well then you're gonna struggle. You're going to struggle. It's about going back to that first M, the market. It's about understanding, right, what environment is that market in? Okay, is it trending or is it range bound? Okay, because if that market is trending, well then if you're operating a trend following method, well then you are more likely to be in alignment with the markets. Okay, so the opportunity for you to achieve a better performance, it raises. Okay, it raises. And that might sound a little bit glib, a bit simplistic, but you would be surprised. You would be surprised how people sometimes they lose sight of that. Okay, they become so excited at seeing markets moving and they want to be part of it that they lose sight of just understanding these most simple of concepts. All right, if that market is trend following, okay, then you want to be operating a trend following method. If it's range bound, well then a range bound method is more likely to sort of deliver you better performance. There are also two other sort of kind of, let's call it, trading methods. Arbitrage, which is sometimes you'll hear that, but it's, to be truthful, for private traders is not really an effective sort of way of engaging with the markets, especially in the old days. Let's say, for example, you would get a price for gold in New York, and you get a price for gold in London, and and if the gold price in New York was higher than the London price of gold, well then traders would effectively, they would sell the New York price, they would buy the London price, knowing that as those markets opened, those prices would tighten up, and they'd look to actually make profit on the difference. Well, actually that's very different thing. Your market's so interconnected in the technology, and in terms of that style of arbitrage is very it's very unlikely to happen, and if it does, then the opportunity for private traders to really to work well with that is it's few and far between. So you want to be aware of it and understand it, okay, but as a general rule, it's not a trading style that I would be that I would be recommending for private traders. And then there's also sort of event driven. Well, not surprising, event driven can be either, you know, sort of can either be sort of kind of a fixed in the sense of, you know, trading around news announcements, and there's lots of people who will do that, and we're going to touch on that a little see changes in geopolitical situation. So as an example, tomorrow we have the Bank of Japan. They're kind of in session. They're going to be having a conversation about their particular policy at the moment. All right, certain let's say certain analysts are considering that there may be a change in the Japanese policy in terms of their JGBs, the Japanese government bonds. And of course, if there is a change in that, well, then invariably that that will have a knock-on impact to the Japanese yen, and so that event will drive trading positions. So for some people that works very well, especially people like myself who like to sort of maybe trade longer term trading. That can actually work very well. But once again, it's about knowing what is the trading method that suits you best, and we're gonna come on to that in the next few slides. And there at the bottom, what I've put is everything works and nothing works. All right, and what do I mean by that? Well, it's all about context, okay? And hopefully you're starting to get and understand that, okay? It's all about context, all right? A trend following strategy works well in a trend following market, okay? I know it sounds very simplistic, but as I said, people quite often lose sight of that, all right? People lose sight of that because they try to be too smart for their own good. And I'm a human being. I have been as guilty of that as anybody else as a trader in the past. That that happens to us. That happens to us. We have to learn that and work. And sometimes it's good for us to be. Sometimes it's good for us to be reminded of such failings in the human condition. So there we go. Markets, method. There we've had a little bit of a insight into them. Now let's have a little look at money, the third M. All right, and the reality is for private traders, this is actually what should be the most necessary focus. Now, as I said, when I run events, people love to talk about their trading methods. They love it. They find it exciting. They're interested. Everybody wants to know where their entry is. Everybody wants to talk about their entries. Okay, but actually, for most traders, they would be more successful if they focused on where their exits are. Okay, and that is about exits, about exiting when you're right, exiting when you're wrong, and part of that comes down to risk management, which I believe should be the most necessary focus. Risk management is really about is really the crux of being a sustainable and consistently successful trader over the course of your career. If you're unable to manage risk, then you will struggle. Okay, you will challenge. I said earlier on that I know myself, I'm a fear-based trader, but the flip side of that coin is that people are greed-based traders. Okay, and they tend to be very impulsive, they tend to be very aggressive, and then they can be good traders, but the thing that normally lets them down is their risk management is woeful or non-existent, and that's the thing that causes them challenges. And so by making sure that you are constantly managing those 4 M's, okay, of trading, whether you are a fear-based trader or a greed-based trader, okay, it's just about reminding yourself to have the right structures in place to be able to ensure that you have risk management. Part of that is also linked to capitalization. Okay, what's your actually your trading what's your trading account with regards to your aims and expectations. So of course as we speak today, we have the new ESMA rules coming into play. Admiral markets have been doing they did a wonderful webinar earlier today, and they've got another couple coming later in this week about that. And of course that will have an impact upon the capitalization you required in terms of your trading account. But it's about understanding and recognizing that and working with it. And and one or two of the sessions what we'll do on these series is specifically about understanding your position sizing and your trade sizing. Okay, making sure that invariably you can live to fight another day. That's the long and the short of it. Okay, we're all humans. We make mistakes. Okay, that's none of us escape that. But by ensuring that you have good risk management, good trade management, good position sizing, it means that even if you do make a mistake, you live to fight another day. Okay, you learn from it, you come back and you get better from it. And then finally, one of the elements with the kind of money management is sticking with it. That might sound once again a little bit simplistic, but very often people struggle with it. Even with a very, very simple kind of, let's say, money management plan, sometimes people can struggle to stick with it because they, for various reasons, they either they are being driven by external factors, or they are feeling a little impulsive, or they are feeling that there's a fear of missing out, some FOMO going out, and they see the market moving and they want to sort of jump on it. So actually money management is in many ways the most simplest element of all to actually get right, but quite often it's sometimes something that traders trouble to stick with it. And hopefully by going through these sessions, it will be a constant reminder of the importance of them to yourselves. So here's a quote by he's an exceptionally good American trading coach, Brett Steenbarger. Okay, he writes an excellent blog for traders. Okay, about his his work, and as he says that a surprising proportion of emotional problems in trading can be traced to improper risk management. And I have seen it both in my own trading experience and also working on trading floors and also working with traders. He's absolutely right. Okay, absolutely right. Okay, some of the problems that we'll see in the managing myself can quite often be traced to sort of poor risk management. And hopefully during these sessions we're going to be able to sort of drill into that and educate you a little bit about the importance of that in terms of helping you become a better trader. So we've done markets, we've done method, we've done money. So let's have a little chat about myself. All right, the sort of the final of the 4 M's of trading. So very often for new traders, this is the session the section that is most often ignored, mainly because people don't realize this. And I have to say, especially men, okay, we quite often sort of ignore that at the beginning. We think that we operate in silos, okay, and that our trading operates in a silo, and that nothing going on in any of the rest of our life will have any impact upon our trading decisions. And unfortunately, I have to say that that's not the case. Okay, that's not the case. Whatever is going on in the rest of your life, you will very often carry that into your trading decisions. So it's important, okay, to understand about managing and mastering yourself as a trader. First part in that is about understanding, well, why are you trading? Okay, what is it that's brought you to trading? What are your aims and expectations? All right, are those aims and expectations, are they the kind of, let's say, goals and objectives that actually that encourage you, that inspire you, that make you sort of determined and motivated to work towards? Or are they aims and expectations that are wholly out of whack with your let's say your skills and your skills in capitalization, and so you're invariably just setting yourself up for for a fall? It's about understanding that those aims and expectations and working on getting them into a place whereby you can sort of learn from them and have them in alignment with what you're trying to achieve. A great deal of it is, as I sort of talked about over the first few slides, is about understanding, well, what type of trader are you? All right. The way I look at it is, the way I sort of describe it to people is that, there is kind of a little bit of the art and the science of trading altogether. It's a little bit about principles. Now, if when you go into your office, if you work, or if you go into the shopping mall, if you go out onto the street, if you go into the bar, okay, just look around at everybody there. Everybody follows some principles in terms of the way they dress. Everybody's wearing a top, everybody's wearing, trousers, everybody's wearing shoes, okay? Everybody has those, let's say, principles that everybody follows, all right? Because if you don't follow them, all right, you tend to get in trouble, all right? You tend to get in trouble. But then if you look at that, nobody is dressed the same. Okay, nobody is dressed the same. Even people, let's say, wearing suits, they could be wearing, different suit, different color suit, different shirt, different tie, different shoes, etc. So, there are principles that people follow, but then everybody has their own style. Okay, some of us are more stylish than others, I might say. But it's about understanding, what's your style, what type of trader are you? All right. And we're going to talk about that quite a lot in a few of the later sessions, because I truly believe that as the great coach Robin Sharma says, you know, if you're able to raise your awareness about who you are and what you're doing, well, then you're in a position to make better choices. And, you know, once you make better choices, you tend to get better results. Okay, you tend to generate better outcomes. And so, you know, as a trader, that is about knowing, right, you know, what type of trader are you, so that you can, you know, start to sort of hone and finesse your own trading style, so that you are trading in line with, you know, with who you are. So you're making better trading choices. And if you're making better trading choices, you know, the opportunity for you to achieve, you know, better outcomes starts to sort of, you know, increase. Along with that, then, you know, there are the we've touched upon them, you know, is that, you know, fear, greed, and hope. All right, nobody is immune to them as a trader, and it's about how you manage that, okay, and how you master them in yourself. That will also determine the, let's say, the velocity of your development as a trader. Okay, people like to think that, you know, professional traders, they, you know, they have ice in their veins. They don't experience fear or greed or hope. All right, and, you know, mostly that's rubbish. Okay, we're all humans. We're just a big bag of chemicals, really. You know, we're just, that's what we are. And it's actually, what's happened is that, you know, let's call them professional traders, you know, have learned to actually sort of to manage those emotions. They've learned to not necessarily suppress them, but actually to recognize them and not always be attached to them. Okay, to recognize them, but to remain detached from them in that particular moment. And, you know, and professional traders also realize that, you know, hope isn't a strategy. Okay, if you find yourself even using that language, okay, if you're in a trade saying, oh, well, you know, I hope it goes to 120, well, that in itself is probably giving you some quite important feedback you might want to sort of learn from. Then, you know, under the sort of heads of, you know, managing myself, it comes down to actually, you know, part of that is about managing your health. All right, so you've got physical, mental, emotional, relationship, and financial health. All right, physical health, you know, that doesn't mean you have to be an Ironman triathlete, but, you know, you need to be in a position to be able to manage your physical health. Your mental health is, you know, that, you know, we talk about that is in the sense of the, you know, the kind of the pictures and the words that you use to sort of describe yourself, to describe your trading. Do they support you, or do they sabotage you? Okay, you know, take a little bit of time to sort of have a little look at that. There's your emotional health, you know, about how you particularly feel about, you know, markets, trading, about yourself, and about, as you know, just touched upon there, about recognizing we will all have those emotions, and it's about actually being able to learn to recognize and work with them. You know, you don't want to be fighting them. Okay, you just want to be able to learn to recognize them, and where possible, you know, sort of detach from them. There's also relationship health, and that's quite a broad spectrum, ladies and gentlemen. You know, that's not just necessarily your nearest and dearest, although that is important. I would also say that is about the relationship you have with yourself, the relationship you have with, let's say, your closest partner, the relationship you have with your family, the relationship you have with your friends, and your relationship with society itself. Okay, trading can be quite a lonesome endeavor for private traders. All right, it can be quite a lonesome endeavor, and as a general rule, we are social creatures. All right, we are social creatures, and actually, you know, even the most introverted of us still needs elements of interaction with other members of society, and we also need to, you know, to work on that. Okay, and be able to make sure that's in place for us. And then there's also financial health. All right, and just what I mean by that is that, you know, you want to be trading with funds that, you know, that are you know, are not necessarily, you know, that not necessarily required for you, in the sense that, you know, if you're trading with funds that you can't afford to lose, well, then invariably it puts you in a particularly tough spot, and that will skewer your decision making. So it's about ensuring that, you know, your financial health is such that you're in a particularly good place to be able to trade the markets. You want to be, it might sound quite strange, but you want to be in a position where you sit down to trade, that you are trading for the opportunity it provides, rather than trading to sort of, you know, trading for the money, because that is a very different mindset to bring to the markets. And then also about myself, you know, linking into what we just talked about, is about recognizing support structures, networks, environments, having them all in place. All right, as I said right at the start, men in particular, they think they can trade in a silo. Okay, that nothing, you know, going on in the rest of their life, you know, has any impact upon their trading decisions. And the more you do it, the longer you're engaged in trading, the more you realize that is actually part of what happens. And so it's important to have those support structures, those networks, that environment around you that helps and supports you, rather than hinders and sabotages you. Okay, and, you know, that can be as as simple or as complex as you wish to make it, but you know, it is exceptionally important that you actually you know, are managing that you are mastering that, because all that goes into mastering yourself. And you know, and to trade exceptionally well for a good period of time at a good size, you know, is you know, it becomes a game around about mental fitness, and you know, putting yourself in the right place to do that is you know, is what I try and hope to sort of, you know, get across to you as a message. So here's another quote from a, you know, very good, very well respected trader, Peter Brandt. He's a sort of a, you know, big long-term commodities trader. Okay, human element of trading is enormously important, has been ignored by other authors for years. Recognizing managing the emotions of fear and greed essential to consistently successful speculation. He's absolutely right. Even in this modern day and age where technology is rife, okay, in terms of what it brings to the party, okay, and you know, more and more people are using that, you know, not only just for their analysis, but actually to engage and automate, you know, their particular trading execution. There is still that human element, okay, is enormously important. And you know, what you will find as you go through this journey of, you know, becoming, let's say, a master trader, is that, you know, you will learn an awful lot about yourself as a person, okay, you know, the good, the bad, and the ugly, as I call it. All right, and it's your ability to embrace that, to work with it, to learn from it, to utilize that and leverage it to make yourself a better trader for tomorrow. That will help you enormously, and it will, strangely enough, also, you know, have an impact upon who you are as a person, how you interact with other human beings, how you see, let's say, other interactions within human society. And, you know, and part of it is actually enjoying that. It's about enjoying that and embracing that journey. Okay, and, you know, like any journey, there's ups and downs. There's peaks and troughs, but it's about enjoying it. Okay, and that's what I'd love to get across to you as an idea. So there we go. Just to kind of recap that, okay, the start. You know, we talk about, you want to be managing those 4 M's of trading. Now, I appreciate some of you who are watching this, you know, you might already have been aware of them, or some of you might be completely new ideas. Some of you might have actually been aware of it, but just kind of poo-pooed the ideas, just thought, no, I just need to sit in front of my charts, and I need to trade this moving average crossover. That's all I need, okay? And I'm here to tell you, as someone who's been doing this for a long time, is that actually, you know, it's bringing all those elements together, managing those 4 M's of trading: markets, method, money, and myself. It's about, you know, working out, are they all in alignment with yourself? If you're having a bit of a trading challenge at the moment, just go back and just to sort of, you know, do a little bit of a reflective debrief, you know, with yourself about how you're doing in terms of those 4 M's, okay? Are you doing a good job of managing, you know, the market environment that you're operating in? You know, are you on top of your methods? Do you exercise really good money management on all of your trading? You know, are you managing yourself properly, okay? You know, because I assure you, you know, if you're struggling within one of those 4 areas, all right, and maybe a couple of them, you might be, you know, you might be challenged, you might be struggling, okay? And you know, I'll give you a free coaching hint. Very often it's in the myself category, okay? It's very often it's in the myself category, all right? Because the thing is, you know, if they're not in alignment, then you shouldn't be expecting outsized returns, all right? As I say, when all those 4 in alignment, that is when people tend to trade at their best. And you know, and it should be about, you know, constantly monitoring those 4 areas for yourselves, ladies and gentlemen. You know, and that doesn't mean you have to, you know, go through War and Peace every week. It could quite simply be part of your end of week, okay? End of week, you know, debrief to yourself about, right, just quickly check in with yourself about, right, you know, scoring yourself out of 10, right, 1 to 10. How have I done this week on your managing markets, okay? You know, how have I done on managing my method, my money, myself, okay? And just, you know, giving yourself a quick check-in, quick score, okay? Starting to record that to see how you're operating, okay? See if there's any little things that, you know, any spikes, okay, or any particular drops, all right? You know, noticing that, you know, whether there's elements of you know, overconfidence if you've been trading really, really well, or maybe there's, you'll notice that your scores are very, very low if you've been struggling, okay? So, you know, you start to recognize these things, you start to see patterns in yourself, and that can be one of the most fascinating elements of it, ladies and gentlemen. You know, where, you know, we tend to look in markets and we look for patterns, and human beings, you know, we very often see patterns where there aren't, but actually as we get more and more data and as we get more and more experience, the ability to sort of see those patterns improves, okay? And you know, seeing the patterns in yourselves becomes one of the kind of fascinating elements of the journey towards mastering the 4 M's of trading. And realistically, that's what we're going to be doing through our sessions together, ladies and gentlemen. Is is the nitty gritty of them is weaving those 4Ms together. Okay, so I'm just bringing them all together, showing you how traders sort of look and operate with those within those four sort of areas there. Looking at how I can pass on some of my my own personal experience, some of my experience of coaching traders, managing traders. Okay, being able to sort of pass that on to you so that you're in a position to start to utilize that within your own trading business, so that you're able to sort of improve and develop and grow as a trader yourself. So, what we're going to talk, I'm just going to very quickly, to sort of finish off the session, is a little bit of the market. It's about setting up our MT4, building the profile with a little bit of simple market analysis, okay, and take any particular questions you may have. So I'm going to switch across to the charts there. I hope you found that useful. I hope it's given you a little bit of food for thought. It's supposed to be as I said, we're setting the scene today. All right, we're setting the scene about what we're going to cover in all our future sessions. But if you've watched this on demand later, okay, and if you have any particular questions, then you'll find your account representative will be very, very happy to help you. Okay, you can see them there on the London number there. Okay, 020-772-64003, or email them at hello@admiralmarkets.com. You'll find this, and along with a whole host of other fantastic content on the YouTube channel and also on the Facebook page there. And as I said, don't be afraid to get in touch with your account representative. They'll be very, very happy to help you with any particular queries or questions that you might have as we go through these particular sessions. So as I said, if you'll just bear with me a couple of minutes, what we'll do is I'll just switch across to some charts. We'll have a little look, a little chat. Okay. As I said, if you've got any particular questions that you might have, then by all means, just tap them in the chat box. Okay, and we'll set up and run as we go for the for the remainder of the session. So here we go, ladies and gentlemen. So I appreciate some of you will join me on the session that I do. I do a Tuesday morning with Jens and Tim on the real-time trading ideas. Okay, a little bit of a short, sharp shock. Okay, in terms of looking at the markets and what have you, but that comes from overall market analysis. Comes from overall market analysis. And so, what I like to do is, what we're going to do is we're going to set up a profile here that we'll use, that'll have a broad range of instruments that we can utilize as we go through our future sessions, talking about those 4Ms of trading. So I've got in here, I've got a good number of FX pairs. So hopefully you can probably just see here that I've set it up here that the setup is like with the dollar in place. Okay, so we'll just have that. So here we go. We've got euro dollar, pound dollar, Aussie dollar, Kiwi dollar, dollar Swiss, dollar yen, dollar CAD. Okay, then there's a little bit of the Dow Jones there. Okay, but also we'll have the I'll just bring it up. We'll also have the dollar index there. Okay, just as there's plenty for us to be going on here. Okay, there we go. So what we're going to use is we're going to have this profile, right? So, as I said, there's plenty of the major FX pairs there. There's a few of the other FX pairs that they're a bit how can I describe it? They're a bit fruity, all right? Okay, there's a little bit of action going on there, okay, and that's what that's what we're looking for, okay. So I think I trade quite a lot of euro sterling, but not a massive amount at the moment. So and I'll show you why, But also one or two of the others. I've got some of the commodities here, okay. Is what you'll see is in terms of I've got oil up here, okay. I've got gold, okay. I think I've got silver. I've also got some of the major indices in here, okay. So we've got the Dow. I think we've got the Dow. We've got the Nasdaq. We've got the S&P. We've got the FTSE. We'll have the DAX, okay. I think we've got the Chinese as well, okay. So there's a good spread of indexes, and I think I might even have I've got one or two of sort of just equity pairs as well. There's Facebook there, so it's been a rather look at that. It's been a rather challenging week if you're a Facebook shareholder there, but there you go. And this kind of brings us to our nice little part to talk about in terms of markets. So remember what I was saying about the markets is we need to sort of just be able to understand is that market trending or range bound. And here's Facebook on a daily chart, and this is a good example of that. Okay, so here we go. Let's go up to the weekly chart. Remember, I was saying I love weekly charts. So as I said, I appreciate there are some people joining us who are completely new to trading. I appreciate there's some people who've got many years of experience. So I ask for your indulgence in terms of as I try to sort of cover as many things to help as many traders as I can during these sessions. This is just a simple profile for those of you who new. I said I've got green bullish, red bearish candles. I have here a moving average, a blue 20 simple moving average, a red 50 simple moving average, and the green 200 period moving average. I also have fractals here, okay, which are just you can see a small little indicator there. You can find them up here, indicators. Go down to Bill Williams, fractals if you're completely new to sort of using the MetaTrader 4 or 5 platforms. So it's very simple. You'll see I don't really have any indicators on there, okay. For these particular sessions, I like to just keep them kind of a little bit simple. All right, I like to keep it very simple. But remember what I was saying is that when I speak to a trader, I need to understand can that trader really identify what the kind of market environment is that particular instrument is operating in. So hopefully you'll be able to recognize that this is as I said, this is Facebook on the weekly chart, and up until about a week ago, I think you'd be able to say that this was in an uptrend. Okay, we were getting higher highs, higher lows. Okay, constantly it's for the last couple of years. Okay, since over the last 5 years, effectively, you can see that has just been one-way traffic, hasn't it? It's just been effectively, it's making higher highs, higher lows. Okay, so when a market is in an environment like that, okay, when a market is in a trending environment like that, well then if you're utilizing a range-bound trading method, well the likelihood is that you're going to struggle, aren't you, ladies and gentlemen? Okay, what you're looking for is, if you're like me for longer term trading, if you're a trend following trader on trending markets, well that's what you'd be looking to do. And as I said, I particularly like to sort of trade pullbacks, and hopefully you can see here, okay, on the weekly chart that very often the 50 period moving average acted as a very nice identification of, like, let's call it like mean value. We can see that price very often came back to the kind of moving average. Again, it would pull back in the 20 and the 50, and then we'd see the price action that would give you sort of a little bounce off there before it moved its way on. Now, of course, we've had a few few pullbacks that were pretty strong, but time and time again, that's what's actually happened. And and so it's quite simple for a trader, right? It's very simple that a good trend, okay, should be leaping off the page at you. Okay, so when you look at that should be pretty simple to say, yep, that trend is going up. All right, and if that trend is going up, I want to be a buyer. When markets are above those averages, okay, markets are making higher highs, higher lows. Okay, you keep it very simple, all right, and you say, well, I want to be a buyer when the markets are doing that. Very, very simple. And a little bit of insight is, if you find yourself struggling, okay, if you're constantly trying to look at charts from all different times of scales and scopes and time, and you're just trying to sort of force it, you're almost trying to force it, to see that there's a trend there, I'll give you a hint. If you're having to force it, the trend ain't there, ladies and gentlemen, all right? It's not there. Good trends, okay, good trends like that will leap off the page at you. Unfortunately, they're not as prevalent as we would like. Markets tend to only trend really somewhere between about 20 to 30% of the time, all right? But then they only have to, okay? They only have to. And when we've got, as I said, we've got a broad spread here that we're going to look at over all of our sessions over the next few weeks, months, and quarters. With indices, with FX pairs, with commodities, with a couple of individual stocks, okay, thrown in. Well, then actually what we've got is there's a broad spread there, so we're able to sort of look and find a couple of ideas where there are opportunities to join sort of trends. Okay, so as we can see, this was Facebook. Okay, yep, it was trend was up there. Okay, it was very clear right up until about last week, And if we see, if I just go down to the daily chart, well, we can see here, you know, we pushed up, okay, all right, then the earnings came out, okay, they sort of missed one or two, you know, they missed one or two sort of their earning calls, not massively, but it was enough, okay, it was enough to sort of drop it here. And my understanding is, I'm sure the stock market historians amongst us would know better than I, that is that apparently that was the sort of the biggest, you know, percentage one day drop in any particular stock in stock market history. And I think someone was telling me that your man Zuckerberg, who runs Facebook, you know, he lost many billions, okay, on that. I doubt many people had too much sympathy for him, because I'm sure he's still probably got quite a few tucked away himself. But nonetheless, it was a big move, right? And so now I start to think about, well, you know, what's the operation as, you know, as a trader? Well, you know, if you're bringing in a little bit of news, a little bit of understanding of the news, well, you know, you might notice that, you know, actually we've had a case of some of that sort of, let's say, some of that bad news filtering through to a few of those social media companies. So here we are in Twitter. Okay, this is Twitter. Now, Twitter's had a bit of a strange kind of journey. You know, when it first broke out, it went well, but then, as you can see, you know, there was a nice downtrend there. It based all the end last week. And, you know, what we can, I think it's, you know, probably clear to say is that, you know, that trend is now over. You know, there's a huge gap there, and what we can see is that actually that selling off is continuing. Okay, that sell off is continuing. You know, so there will be some people. Okay, there'll be some people who, you know, some fundamental traders will be saying, I'm going to buy that because, you know, it's cheaper than it was, and they will happily buy that. Personally, me as a trader, when I see something like that happening, okay, I look at that as like, that's a freight train, okay, and I'm not going to step in front of a freight train, okay, until it's slowed down and decided to turn. And at that moment, when I see that, ladies and gentlemen, that is not what that's done, okay. You know, we've had a nice uptrend that's basically has been broken, has been completely has been ended, all right. And now what I'd be saying is, you know, it's a case of, you know, you'd be waiting, okay, you'd be waiting to sort of let the dust settle before you start to sort of see, you know, what you'd be looking to do there. So I see, you know, we're pretty much already, you know, we're up for our hour's time. It's time flies when you're having fun, ladies and gentlemen. So, you know, it's a case of today's session was always a little bit about setting the scene, starting to get you to think and recognize about those forums of trading, work out and understand how they filter through into your own trading. What is it you're looking at? What is it you're trying to understand? Okay, how is it that you can utilize that information to make yourself a better trader tomorrow? Because really, that's what my aim is. Okay, my aim from these sessions over the weeks that we will do them is that, you know, week by week, okay, as we look into some of these subject matter in greater depth, we'll actually sort of, you know, be able to sort of, you know, help utilize them to help make you a better trader. And that's what I'm hoping that you'll be able to take away from these particular sessions. So if there are any particular questions right now, I'll happily take them. And, you know, what you can do is, you know, these sessions will run every Monday. So if there's a particular instrument that you would like us to have a look at, a little particular market, you know, sort of dynamic that you'd care for us to look at, well, then, you know, we can happily do that. You know, as I said, this will be partly educational, partly an element of market analysis, part of looking at methods, we're looking at money management, also a little bit of trading psychology about managing ourselves, but, you know, also, you know, a little bit of an opportunity for you to engage with, you know, a professional trader and ask some of those burning questions that might have been keeping you awake at night, ladies and gentlemen. And, you know, and I'll be very happy to sort of try and help you with them as you know, as and if I can. So there you go, ladies and gentlemen. I hope that was a useful session for you. As I said, it's all about setting the scene, and getting you ready for what lies ahead. And I look forward to sort of speaking to you to next Monday, okay, as we will sort of just build on what we started today. And for those of you who are also, you know, sort of trading full time, you have the opportunity to join me at 10 o'clock every Tuesday morning for the real-time trading ideas, where, you know, there's a little bit of a 15-20 minutes sort of short, sharp shock on market analysis, trading opportunities. And you're very welcome to join it. And if not, I hope to see you at our next session next Monday, ladies and gentlemen. Thanks very much for joining us.